Good afternoon, students. I hope you are well. Right, today we are going to continue with a question that we started on last week, and we will complete it, and then we will probably just talk a little bit about bank reconciliations, the principles thereof again. So I'm just displaying the question again so that it is familiar to you, so that you can find it. You know that it's under that folder that deals with this class. So it's the same question. I just want to go through it again briefly to recap where we finished and what have we in front of us. So when it comes to this adapted question 12.11, Levante, can you tell us about the test we're writing on Friday? You're writing it at 2 o'clock. At 2 o'clock, it starts at 2 o'clock. I think it closes at 4 o'clock. It's a 75-minute paper, 1 hour, 15 minutes. It is going to cover value added tax, as well as special journals and ledgers, and just a few short questions on the basic principles of reconciliations, especially bank reconciliations, right? So that is what it covers. So everything we've done from the beginning of this term. Value-added tax, special ledgers and journals, and a few short questions on reconciliations. Is there anything that I left out? There is a set of instructions right at the start of the test, the same as always. If you encounter any problem, you must just send me an email immediately. Okay, so this was the question, ladies and gentlemen. What we've done last time is we looked at which are the special journals that we need to open. And you'll remember we opened a cash receipts journal, a cash payments journal, a sales journal, a sales returns journal, a purchases journal, as well as a purchases returns journal. And then we also added all those balances, let's say for the first half of the month. So there were some other transactions. So those were the transactions for, say, the first half of the month. We captured that in our various journals. And then we had these additional transactions, quite a number of them. I think there's about 14 or so. But anyway, it goes up to number 9. But some of those numbers or paragraphs had more than one in more than one transaction, so it required more than one entry. So that we've already done. So what we need to do today is to now go and post. First of all, we're going to post the transactions to our subsidiary ledgers, right? So we're going to post it to our subsidiary ledgers. In that process, we are going to imagine that we've been given debtors, individual debtors and individual creditors opening balances. They don't give it to us here in the question. They just tell us that the total accounts receivable control balance was 65,000 and the total accounts payable control balance in the general ledger had an opening balance of 53,000. But we'll use our imagination and we'll just give our debtors and creditors we'll thumbsuck it. We'll give them an opening balance just to illustrate it, right? And then after we've posted it to the subsidiary ledgers, we've also got to post our totals from all our journals to the general ledger. Now I'm going to stop displaying the question. Hopefully by this time you've got it open on your side. But here, right at the start of the question, they also gave us the opening balances for all those general ledger accounts. So when we are going to look at the capital account, we must take into account that was its opening balance. When we look at our accounts receivable control account, we must remember that is our opening balance. And the same with all of these other accounts, right? So they already have balances as at the end of, what was it, April, I think, April 2010. So these are now the additional transactions, these for the first half of the month. and these, let's say, for the second half of the month of May. So that is what we did last week, ladies and gents. So now let's continue with it. So I'm just going to stop sharing that. I'm going to leave it open on my side in case we need to refer back to it. And then we are going to look at our spreadsheet again. Just waiting for it to appear on your side. Okay, so this is where we were. This is where we were. Now, what I've done in the meantime is just to add two new tabs. We'll look at them just now. So this is where we finished. This was our cash receipts journal. We had a cash payments journal. We had a sales journal, which is also known as an accounts receivable journal. We had a sales returns journal. Oh, now my collaborate is in the way. Sales return journal. We had a purchases journal. We had a purchases returns journal. So what do we have now in addition to that? We've also now got an accounts receivable ledger. So that is a subsidiary ledger, and an accounts payable ledger. Now, what we have to bear in mind here, ladies and gentlemen, is that in our general ledger, we've got the control account for all our debtors, and we've got the control account for all our creditors. So even though we're going to post the totals of our subsidiary journals over to the subsidiary ledgers, we also have to go and post over the individual transactions with those particular customers and with those particular suppliers or creditors that we made during the course of the month. So that is our next step that we have to go and complete. So now I'm going to ask you a few questions, ladies and gents, as is our custom. If we go to our accounts receivable ledger, and there I've just made a typical, it's just a blank form. Let us maybe look at the format. So we've got an accounts receivable ledger or debtors ledger for May 2010. Now, there's actually a little secret here that I've got to tell you. It's not specifically mentioned in your textbook, but it is important to know there are more than one way in which you can draw up your accounts receivable ledger as well as your accounts payable ledger. This is probably the more modern version. This is also the version that is used in the slides and the version that's used in your textbook. So there we've got a column for the date, a column for the details, a column for the document number, or folio as they call, and then our debits, our creditors, and then we keep a running balance. We keep a running balance after each transaction. So that is the one method, and that is also the recommended method, and it is the latest and newest method. However, there is another method that is still very popular in practice. I encounter it still very often when we deal with clientele of businesses, and they ask me for a consultation. Right then, the other way that it can be done is similar to a T account, similar to a general ledger account. So in the accounts receivable ledger, they will have a debit side. In other words, it'll be a T account. It'll be that typical T format, and then they have a debit side and they have a credit side. The disadvantage of that, they both work equally well, but the disadvantage of the old method where you have a debit side and you have a credit side is that if you use that method, every time you want to see the balance on that person's own account, it means you have to go and balance that T account off. So the advantage of this one is that you get an automatic balance each time that you either debit or credit them with any kind of transaction. This is obviously also the method being followed in computerized accounting packages, right? In accounting information systems, one next year in your second year, you'll be taught a very popular package called Sage One, Sage, not Stage, Sage One Cloud Accounting. It is the more modern version of the old Pastel. So you'll be taught that, but there are many other packages such as Pastel, such as QuickBooks, for instance, and they all use this method, this more modern method. So we are going to stick with that. Okay, ladies and gentlemen. So now we've got an accounts receivable ledger. We'll probably need more than one account, but we'll see. So this is now for one specific debtor, one specific customer. So now we'll have to go and see which customers we have, and we'll have to see which transactions were done with those customers. Now, like I say, they haven't given us any opening balances, so we are going to imagine a few. But first of all, we've got to go and see and determine where are we going to find transactions with our accounts receivables or our debtors. So, ladies and gentlemen, the first thing that I'd like you to type for me in the chat is, in which journal? There's more than one, but let us start with anyone. In which journal will we find transactions, new transactions with our customers? If you can type for us a journal there, please. You can use any of the two popular names. If we have a new transaction with a customer, in which journal will we record it? Now I'm going to give it away. Let's say it was for a service rendered or for a sale made to the customer. Kensani, that is one possibility. That is the one. That is where we are going to in the cash receipts journal is where we are going to record any payments that we receive from them. So Kensani, you are quite right there. So when our customers are making payments, we will record it in the cash receipts journal, and we will have to go and post over each individual transaction to each individual debtor's account in the subsidiary ledger, right? But we'll do that secondly. We'll do that after we do the other one. There are actually two others. There are actually two other journals. The debtors journal, yes, also known as the sales journal, right? Debtors or sales journal. Thank you, Kensani. That is one. Tamarin, yes, the sales journal. So you've both got that right. So we've got two journals now already. When we make a sale to our customer, we're going to record it in the debtors or accounts receivable or sales journal. Now there are three names for it already, but it all means the same thing. If we receive money from our customer, we are going to record it in the cash receipts journal. There's one more journal that relates to our accounts receivable. There's one more. Now you can see it displayed. Not the actual journal, but its name. So we've made the sale, we've recorded in our sales journal or accounts receivable journal or debtors journal. When they pay us, we record it in the cash receipts journal. What about if they're not happy with the goods that we've sold to them? They can return it to us, right? Or in the case of, I think, one of the scenarios here, we overcharged a customer. So there's one more. What is that other one? The sales return or sales allowances journal. So those are the three journals that we will have to go and look at. So let us perhaps start with the sales, because that's where everything sort of originates. They're not going to pay us if we haven't made sales. They're not going to return anything if we haven't sold to them. So let's start with our sales journal, ladies and gentlemen. So now we can see in our sales journal, we've got these two debtors, right? R Rhodes and B Flower, which we sold to during the course of May, right? You agree? Thank you, Senziwe, and thank you. Oh, no. Let me just move my collaborate again. Mhlontu, thank you. Uh, Thank you, Tamarin. Right, so you've mentioned everything there. Now I've got to move my collaborate again so that it's not in front of my control buttons. Okay, ladies and gents, so that now means we will have to go and open an individual account for each of them. So first of all, we've got R Rhodes. R Rhodes, so that's one of our customers. So let's go to our accounts receivable ledger. R Rhodes, we might as well copy this now over because we've seen we've got two of them, A, B, C, D, E, F, so that's 6. And it goes from 5 to 20. 2, 3, 4, 5, 6. Right, so we've got two debtors, or two debtors that we know about. So this is now R Rhodes, so let's start with that. R Rhodes. Now we don't need to do it for both of them, but let's at least make an opening balance for this one. So let's say on the 1st of May, sorry. On the 1st of May, we had a balance. We won't have a folio, and let's say that balance was 1,200 rands, just to give it a figure, right? So we've got a balance there. We don't need to have one for the other person as well. Let's just see what that other person's name was. Sales journal, B Flower. Right, so those are our two debtors that we know about. Now let's just imagine this person did not have an opening balance. Doesn't matter. We can give that person an opening balance, but to illustrate it, we only need one. Now let's go and see, ladies and gents, what was that transaction that we had with R Rhodes at the beginning or in the second part of the month. So we go to our sales journal. Now the question is, which of these figures, the 570, the 496, or the 74 rands, which are we going to post to the debtors ledger or the accounts receivable ledger? Which one of those three values are we going to post to their personal account? If I can give you a hint, maybe, you must remember that the total of all the individual accounts in your subsidiary ledger, in this case debtors, all your individual accounts, their totals must agree with the control account, the accounts receivable or debtors control account in your general ledger. So if your accounts receivable control account is going to be debited with a figure, then you've got to debit that individual debtor's account with the same figure. So that is a good hint, I think. So which of those three amounts are we going to take to the individual debtors? The figures under DJ. Yes, the figures under the debtors journal. But which one? Senziwe has got the correct one for us there. Kensane has also got the correct one for us there. So it's going to be the total amount, ladies and gentlemen, right? In other words, the consideration. Uh, Maybe I should just put, just to make this clear. Let me just separate that, right? So that is not that journal. That is a separate line. So the column name is not journal debtors. It is debtors. Okay. So it's the 855, ladies and gents. The 855. Let me just repeat that. Remember, that goes to the credit side of our sales account, that figure. That figure goes to the credit side of our VAT output account, but the debtor owes us the full amount for those two combined. So they owe us the 855. So it means we are going to debit our debtors control or our accounts receivable control account in the general ledger with 855, which in turn means that we've also got to go and debit that individual customer's account in our debtors ledger with 855. In fact, that is what they owe us for that transaction, right? Okay, so let's go and do that. 855. Next question, for that 855, are we going to put that in the debit column or the credit column? What have we done with our debtors control account? We've got to do the same with the debtors ledger. Oh, I'm so sorry. I'm so sorry. My microphone wasn't on. I had a cat. I've got a cat that's a nuisance here, and I was just shooing the cat. I'm sorry, and then I forgot to put on the microphone again. I'm so sorry. Let us just go through that then again. Let me now just double check the micro. Let me just double check. Yes, the microphone is on. So what we were saying is we're just going well, we know that the amount was 855. So we said that we just give it an imaginary date. Let's say it's the 15th of May. And then the details, it was credit sales. So it was sales that we made on their account. the folio will simply be our invoice number. So let's assume that this was tax invoice number 1224 for 855 rands. Now, ladies and gentlemen, our next question: will that credit sale, will it increase or decrease the outstanding balance? Thank you, Levante and Senziwe, for pointing out that my microphone was still off. And now I've got to cough. And now I've remembered to turn it on. Increase. Thank you, Sisanda. Right. It's going to increase the balance. The balance outstanding is now more. So now let's go and give this little sheet a little program. We'll just program it basically. So you say it's going to be more. So we are going to say that the opening balance was D8. D8, and now we've got to say plus D10. So that means we've now got a running total, and we can see now that that specific customer of ours, right? They owe us 2,055 rands after we've made that sale. They owed us 1,200 at the beginning of the month. They owe us a further 855 for that transaction. So now they owe us a total of 2,055. So we can every time that we do a debit or credit that we have got any transaction, we can go and update our balance. So we've got this running total. We know at any point in time what each and every customer owes us. Now let's go and do the other one as well, ladies and gents. So let us go back to our sales journal. So in the case of beef flour, we had a sale with a value of 496 rand. We had VAT output with a value of 74 rand. So the total consideration that beef flour owes us for that transaction is 570 rand. So now let's go and post that. So let's say that was on the 17th, just to have a date. That was again for credit sales. I'll make that a little bit wider. And let's say this invoice number, let's say that was just the following one. This tax invoice number was tax invoice 1225. And would you believe now I've forgotten what was the amount? 570. Let me just go back. 570 indeed. Right, so now we've recorded our sales for the month in our individual accounts for our individual specific debtors or accounts receivables. Right, so each customer has got their own little page or their own little account within this accounts receivable or debtors ledger. Right, let us just pause there for a second. Are there any questions from your side at this point in time? Doesn't seem to be. Okay. Now, ladies and gentlemen, as we've said at the beginning, besides the sales journal, they could have also made payments to us. So we could have received payments from them. And as you've correctly said there, so that means we also have to go and have a look at our cash receipts journal. So let us go to our cash receipts journal. That's right at the start, if I remember correctly. Cash receipts journal, right. So what did we have here? What did we have here? we had 3 transactions here, right? We had 3 transactions. We had the owner, besides now the opening total, so those were the opening totals. So besides that, we had the owner's capital, where the owner contributed a further 15,000 rands, right? Then we had T3, which we can see we've credited our bank, we debited our bank account, we've credited our accounts receivable account. What does that mean? It means our debtor called T3 made a payment on their account during the course of this month, right? And then thirdly, ladies and gentlemen, we had cash sales. So cash sales, we debited bank, we credited sales, we credited VAT output. So clearly it was not a credit sale, it was a cash sale as it indicates. So that did not go through our sales journal whatsoever, because only the credit transactions go through our sales journal. But now we've got this person here, T3. So we'll have to go and open an account for T3 as well. So let us go and do that. So we go to our accounts receivable ledger. Let's just copy this over again. Let's start there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So now we've also got an account for that person. We've just got to give it the correct name. So that's T3. T3. Now we'll have to go and imagine that this person also had an opening balance. They wouldn't have paid us if they didn't have an opening balance. Let's give it a different balance. Let's say this person had an opening balance of, let's say, 800 rands. Right, so we had an opening balance of 800 rands for T3. Now T3 had made a payment to us, let's say on the 20th of May, or well, let's go and have a look. Let's go and have a look rather. I'm not sure whether we did actually give it a date. Yes, we did. So on the 20th, 753. So on the 20th of May, 753. So that was the 20th of May. Before I forget the amount, 753. Okay. This was a payment received. I can't spell today. Payment received, and then we've got to give it a, just have to make that a little larger. It's not that one, the other one. Payment received, ladies and gentlemen, and this will now be a receipt number. It will not be an invoice number. So let's say this was receipt number 2121 or whatever, right? So it is just the folio number, or the number of the document that we've actually used. Maybe I should make that a little bit wider. 753. Okay, so we've received payment of 753. Now let's just go back to our cash receipts journal. Let's go back to our cash receipts journal. So we debited our bank account. I had a ping there. Levante, we haven't actually debited it yet. I just typed the figure in. I just typed the figure in so that I don't forget it. We're going to talk about that now. This is why we're going back to the cash receipts journal, right? So I'm sorry if I confused you there. I just made a note of the amount. So let us now look at our cash receipts journal. What happened here? We debited the bank account and we credited accounts receivable. Right. So it means at the end of the day, and we're going to do that later on, we're going to total this up and we're going to post it to the general ledger. So it means that our accounts receivable control account, the accounts receivable control account in our general ledger, is going to be credited. It's going to be credited. That is Levante's point there, right? It's going to be credited, ladies and gentlemen, and we know that the total of the individual accounts in our debtors ledger must agree with the total balance in our accounts receivable control account in the general ledger. So that brings me to the next question. For that person's individual account, let us go there. For that person's individual account, must we debit or credit that account? Must we debit or credit that account? Actually, Levante, I think, has already given us the answer, but I just want to check. We've got to credit it. Thank you, Tamarin. Right. So you all understand that is why that's got to be credited as well. So let us go and do that. So that is not a debit, that is a credit. Right, ladies and gentlemen. Now our next question. Our next question. Once we've received that payment, from our debtor, do they owe us more money or do they now owe us less money? Less. Thank you all. Thank you, Levante, Zisanda, Logan, Zisanda. Right, you are correct. They owe us less because they've made a payment on that account. So it means that that transaction, the fact that we've issued them with a receipt, we've received their money, is going to reduce. It's going to reduce the balance. So let us go and do that. So that will be equals, what is that now? 26D. 26 minus D28. I've done something wrong there. D26 minus D28. Now, why is it not working out for me? Let me do that again. There's actually something else I want to illustrate. In fact, let me do that now. You can see we can actually program. We can program this whole debtors ledger so that we can just copy that formula at the end. So let us do that. Let us do that now. Let me just delete that. So this is actually what I want us to get the idea of. So here we can actually say for every debit, it's going to be a plus, and for every credit, it is going to be a minus. So what we could have said here is equals D, what was it, 26, right? And then we could have said plus D 28, plus D 28, and then minus E 28. You think that will work? So this is a formula that we can use to include in this whole balance column. So for every time that we've got a debit, we have a plus. And for every time we've got a credit, we've got a minus. I hope that makes sense. So that means then the balance now at the end here is 47 rands. Thank you, Levante. Thank you, Tamarin. Yes, E28. I was just thinking how I'm going to illustrate that we can combine the two, because you see why I'm doing that formula is that if there's a credit for that transaction, your debit will be a 0. Or if there's a debit for that transaction, your credit will be a 0. There will normally not be a debit and a credit in the same transaction. So therefore, we can actually say it's going to be the previous balance. And I'm going to carry on with this formula now. The previous balance, then plus any debits minus any credits. So now if we go to the next line, what can we say, ladies and gentlemen? What is going to be our formula? Our formula is going to be equals F. Now we have to look at F. It's going to be F28, F28, right, plus D29, right, plus D29 minus E29. It'll obviously now still be 47 rands, but you can now see if we had a debit there of, let's say, 100, right? If we had a debit of 100, that will increase that balance by 100, right? Let me just delete that. Or if we had a credit of, let's say, 10 or 20 rands, let's say 20 rands, it would have decreased that balance by 20 rand. So it means that if we now go and copy this formula, we say copy that formula, and we go right down to the end of our, we can actually go right down to there. Not there, sorry. To there. It means every time we have a transaction, we have a running total. Does that make sense? So if, say, for instance, here we make a sale of, let's say, 4,000 rands to them, 4,000 rands, it will increase their balance. If the next day they pay us 2,000 rands, it'll decrease our balance. So we can have a running total as we carry on. But in any case, just going to leave that as is, the actual transactions that we had. Okay, so you see the method, or you see the logic in this, ladies and gentlemen. You can also now go and do that with all your accounts. So at the end of the day, every time that you are going to record any transaction, you are going to have a running total. Okay, so now let's go and see which other possible ledger could affect our debtors. Which other journal can affect our debtors ledger? Let me just get this phone. Thank you, Levante. Yes, no, I noticed. That's why I just had to get it quiet now, because it's a private call. I haven't got time for private calls when we're busy. Okay, so which other journal must we also go and have a look at for possible debtors transactions? We had a look at the sales journal. We had a look at the cash receipts journal. There's one more. The sales returns, or the sales allowances journal. So that one we must also go and have a look at. So let us go there, ladies and gentlemen. So we'll have to go a little bit back. Sales returns journal. So did we have anything? Right. Accounts receivable allowances journal. Accounts receivable allowances journal. So there we saw that there was a credit note. I think that was actually an overcharge. We overcharged that debtor called G&G dealers. So let us now go and post that as well. We'll have to go and open an account for G&G dealers. GG dealers. So let us just go to our debtors ledger account or debtors ledger. Just let me get this collaborate control out of the way and let us copy this over. Let's say they had a balance at the beginning of the year of let's just ignore the balance. We've already now illustrated that. Or let's leave the balance in there. Let's leave the balance in there. Let's just make it a different figure. Let's say 500 rands. Okay, so they had a balance of 500 rands outstanding, and then we saw what was their name? GG dealers. Dealers, and then they returned, or we overcharged them. Let us just go back. We overcharged them by 228 rands. Now, once again, ladies and gentlemen, what we need to remember here is that our sales returns will be reduced. Our sales returns will be debited with 198. Our VAT output will be debited with 30 rands, but the debtors control account will be credited with 228 rands. 228 rands. So therefore, the individual debtors account must also be credited with 228 rands. So let us go and do that. Let me just put the amount in before I forget. Right, so now I didn't check the date. I'm not sure whether we gave it a date, but let's go and see. Yes, we said on the 21st. On the 21st. So if we had given it a date, we've got to use the same date. 21st of May. Can you just remind me, ladies and gents? I'm just, if you can just type in the chat for me. Was that actually something that we've returned, or was it the overcharge? I think we returned something to a supplier, but that was an amount that we overcharged. Maybe I can just look at the question again. I'm not going to display it, but I've got it on my side. Issued a credit note to GG dealers for an overcharge on an invoice made out to him of 228 rands. That was paragraph number 6. So it was an overcharge. Right, and now we've issued them with a credit note, so that will be credit note. Credit note, let's say number, let me just go and see whether we gave it a number so that it corresponds. Credit note 101, credit note 101. Credit note 101. Right, so there we've now also recorded that. So now we've got 4 different debtors, and each one has got their own little account in our accounts receivable or debtors ledger. And as you can see, we record the opening balances. Every time we make a credit sale to them, we will debit their account. There's another debit, another credit sale. Every time that they make a payment to us, we will credit their account as well as the control account, the debtors control account. If they return anything to us, we will also credit their account. So that means they now owe us less. Right, ladies and gentlemen, so that is our accounts receivable ledger done and dusted. We are happy. We have now updated all our transactions during the course of the month to the individual account holders. Let me just also get our running total there. Just for the sake of completeness. So we've completed this. We've got our running balances. We've got a running balance there. We've got our running balances. We've even pre-programmed it for all the other transactions that we may need. Same with this one. So now we are truly done and dusted. We know that this debtor, R Roads, still owes us 2,055 rands at the end of May. We know that B Flower still owes us 570 rands at the end of May. We know that Tea Tree still owes us 47 rands at the end of May, assuming those Samsung opening balances. And we know that GG Dealers still owes us 272. And if we should now go and add up, that 2,055 rands plus the 570 plus the 47 plus the 272, and assuming that we've got no other debtors, that these four are our only debtors, it means the total of those three balances must agree to the debtors control account balance in the general ledger. Right, that is why it's called. Thank you, Senziwe. I now see you've said overcharge there. Thank you so much. Yes, it was an overcharge. So that is why it's called the accounts receivable control account. So it gives you a balance. It gives you a control over your individual balances, your individual debtors. So if the balance in your control account in the general ledger does not agree with the total of the balances in your debtors ledger, it means there's a mistake somewhere. And then as an accountant, you will have to go and find it. Okay, ladies and gents, so our debtors journal, our debtors ledger, I should say, done and dusted. So now let's go to the next one, which is our creditors journal or accounts payable. Sorry, ledger, accounts payable ledger. Right, so now we've got to go and see where are we going to find transactions and where are we going to find the individual debt creditors or suppliers of ours, our accounts payables. So which journals will affect our accounts payable ledger? Let us talk about that first. So again, it's going to be three journals, but three different journals. I actually gave it away because there are only three left. It's, in other words, the other three journals, but let us name them so that we know about them. If we made new acquisitions, the cash payments journal, Levante, thank you, that's one of them. The cash payments journal, when we make a payment to our creditor, when we make a payment to the creditor, we're going to record it in our cash payments journal. But before we make a payment to them, we must have bought something from them, right? So what will be the other journal that is going to be our source? Thank you, Logan. The cash payments journal, the purchases journal, and the purchases returns journal. There, Logan has given all three of us, right? So the purchases journal, the transactions that you would have recorded there would have been when you bought merchandise from the supplier. If you weren't satisfied, I think there was one such an example, one such an event. If you're not satisfied with the goods that you've received and you return it, then you are going to record it in the purchases returns journal. And when you make a payment on your account to your supplier, you are going to record that in the cash payments journal. So let us start with our purchases journal because that is normally where everything, when it comes to our purchases cycle, where it starts. So let's go and see what happened in our purchases journal. In our purchases journal, we there at one item where we did what? Let us see. Date, document number, Chico wholesalers, creditors, purchases, that input. So that clearly was a credit purchase. Right, that is why we have credited, as we can see, we've credited our creditors, we've debited purchases, and we've debited our VAT input. So let us go and give that account a name. So it's Chico Wholesalers. Chico Wholesalers. Chico Wholesalers. We don't know what the opening balance was, but just for illustration purposes, let's give it an opening balance. That'll be on the 1st of May. That is an opening balance that we've brought forward. We won't have a folio. And in this case, because it's an accounts payable, we won't have a debit balance. It's going to have a credit balance. So let's say our credit balance was 2,400. So let us just put that in now there as well. So that equals, let me just put that in 2,400. So now we can go and program our balance column. We'll do that soon. Let us just go and record that purchase. So unfortunately, well, they're now closer to one another. That we said was on the 17th. 1, 2, 3, 4 was the document number. 17th, 1, 2, 3, 4. 17th of May. Our document was 1, 2, 3, 4. This was a credit purchase. Credit purchase or credit purchases. And now I've got the amount again. And the amount that we've purchased for was, let me see if you know which one of those three are we going to be using. Let me just add a little column there, a little row. The 2508, thank you, Levante, thank you, Logan. So the total amount, the total consideration of the purchase, so that includes the value of the goods plus the value of the value added tax, it gives us a total of 2,508. Are we now going to debit or credit them? This individual. What did we do with our creditors control account? What did we do with our creditors control account? We credited them, right? Thank you all. So we credited the creditors control account, which means that the individual creditors account must also be credited. So now let's go to our accounts payable ledger. Let me just see what was the amount there. 2,508. Fortunately, you typed it for us. 2,508. Now we can go and program our running balance for us. So we're going to say this running balance is equals to F8. Now we've got to say if it's a credit, it's a plus, right? So plus E9, right? And if it's a debit, it's a minus E9, right? So that will give us a running total. We can copy that over for future reference. So it'll give us after each and every transaction, it will give us a balance, right? So there we had 2,400 opening balance plus this transaction where we purchased for 2,508. So we know that we owe them a total of 4,908 rands after that transaction, and we'll also know after the next transaction what we owe them, after the next transaction what we owe them, because that now becomes a running total. Right, ladies and gentlemen, so you've said this purchases journal, it was only the one transaction, but we know that the purchase returns journal could also have an effect, right? So we go to our purchases purchases returns journal, also known as accounts payable allowances journal, same thing. We see that we returned certain goods, and this was actually a return of goods to the value. The goods value was 496. The value added tax value was 74 rand. So the total consideration that we no longer need to pay them is an amount of 570. And because we debited our creditors control account, which we'll see when we add this all up later on, it means we also have to debit the individual creditors. So we go to our accounts payable ledger. Let me just see the date. We didn't give it a document number this time, but we did give it a date, the 24th. 24th of May. Right, and this is purchases returns. Or you can say goods returned if you want. Goods returned will also work, because remember, this is not part of your general ledger accounts, right? This is just really a description, and we would have issued them with a debit note. They would have issued us with a credit note. So let's say this is debit note number 235 or something. Now I forget the amount, 570, right? 570, what must we now do? Debit or credit them? Let's double check. We said in the purchases return journal, we're going to debit the creditors control account. So in our accounts payable ledger, we've also got to debit the individual creditor, right? So that must be the same. If you debit them here, the control account with the total, you've also got to debit the individual account. Now we see once we've returned the goods to them, we don't owe them 4,908 rands anymore, because we owe them that 570 rands less. We only owe them 4,333 rands. Okay, ladies and gentlemen, so far so good. Thanks for those answers. Right now, what we must still do, we must still go and look at whether we made any payments to our creditors. Have we made any payments to our creditors? Let's go and see. So our source for that will be our cash payments journal. So let us go to our cash payments journal. There's our cash payments journal. So let's see, what have we paid? What have we paid? We've made 3 payments during the course of the last part of the month. We've paid the wages, where we credited our bank account and we debited our wages expense. So that did not affect our accounts payable whatsoever. Let's go to the last one, and then we'll return to the middle one. There we paid Drakensberg City for water and electricity. We credited our bank account. We debited that input with a value added tax portion. We debited the water and electricity expense account. So again, it did not affect our accounts payable. But this one did. Here we've got Fred Traders. We paid them 1,900. So we credited our bank account and we debited accounts payable. So Fred Traders, we must now go and open an account for. So let's go and do that for Fred Traders. So we'll just copy that over. It goes to F, so that's 6. 1, 2, 3, 4, 5, 6. This was Fred Traders. Fred Traders. Let's just take this out. Let's give them an opening balance equal to what we pay them, just for fun. Why not? So what did we pay them? Cash payments journal, 1,900. So let's say we paid our account in full, 1,900. Let us do that. So we owed them 1,900. Owed them 1,900, right? So now we made a payment. Now let's just go and see again if we've got a date there. We said on the 20th. We didn't put our EFT reference number, our electronic funds transfer requisition reference number, but we've got a date there of the 20th. The 20th of May. Say paid on account, or in this case, we settled it in full, settled account. There normally we'll now have our EFT. Let's give it a number. EFT number, and the amount that we've paid them was 1,900 rands, right? And if we pay them, it means we have to go and debit the individual account. So that means we don't owe them any money anymore. So our running total indicates that there's a zero balance outstanding to them. Okay, ladies and gentlemen, so we had a look at our purchases journal. We had a look at our purchases returns journal. We also had a look at our cash payments journal. So that means we have now updated all our individual creditors accounts. And if these are the only two creditors we have, it means that the credit balance on our creditors control account in the general ledger at the end of May should be that the 4,336 rands plus the zero. Right. Okay, let us just pause there. Are you happy with the postings to the subsidiary ledgers, ladies and gents? Yes. Okay. Thank you, Logan. So there's nothing unclear. So just to summarize, we have to basically go to our relevant journals, and we now know which journals are relevant to our debtors ledger, and we now know which journals are relevant to our creditors ledger, and we've got to go and post every single individual transaction to that every single individual debtor or creditor. Obviously, when you are going to be using Sage 1 cloud accounting, when you are going to learn about that, those packages have already been integrated, right? So if you record something in your sales journal, for instance, it will update your debtors ledger and it will update your general ledger. But still, for our purposes, we must know that. That is why we are focusing on a manual system as explanation for eventually the automated system, right? So we first got to know how it works, and then later on, we get the luxury and benefit of this being done automatically for us. Okay, right. So now all that remains for us, ladies and gents, is to go and post everything over to our general ledger as well. So let us go to our various journals. So let us go right to the beginning. Our cash receipts journal. I've just added the first total there, so let us copy that over. Right. Now this, because we've indicated in our general ledgers, or in the general ledgers, we'll see they indicate those opening totals separately. So I've only added up the new transactions here. So this doesn't actually include the opening totals. But what I've got to add, and what I've got to mention, is that if in our solution for the general ledger, they didn't show those opening balances separately from those additional transactions, it would have meant that we would have added everything up, right? We wouldn't have only added up those part and that part, we would have added up the whole column, right? So that 19,629 rands actually only represents those three figures, right? Doesn't represent the total column. We should still have added that 196,950. So the true total for that would actually be 19,629 plus 196,950. But like I said, just because the solution indicate them separately, we've kept them separately. Let's go to our cash payments journal. We also add that up. So let us just do that. So once again, I'm just going to add up the new transactions, not all the transactions. So in fact, that total will in actual fact be the 9820 plus the 70,030 rands, right? So one should actually add that. So let us just go and add up those columns. And that we must now simply go and do for all our various journals. I'm not going to do all the journals, or maybe I can do one more here. Or if you want me, I can do all of them. It doesn't really matter. Once again, the true total there will be the 1425 plus the 18,400. So it should actually be the full total. But I know I'm repeating myself, but just for the mere fact that we're not using the cost of sales in this one, just for the mere fact that they are showing it separately in the solution to the general ledger, we just keep that separate. Okay, ladies and gentlemen, now let's go and look at our general ledgers. I'm going to post this updated spreadsheet onto Blackboard for you. I'm also going to update post, I haven't posted it yet, the general ledger accounts for you. But let us just go and have a look briefly at some of those general ledger accounts. Let me just make sure that my autosave is on. It is on. Everything has been saved. I had a ping there. So, sir, even during exam where the opening totals are separate from transaction, does this mean we also do? No, Shkumbuzo? No. I'm actually now a little bit unhappy that I'm using the suggested, or the old version of the general ledger. I should have actually done a separate one. So when it comes to in practice and in exams, right? So even during tests or even during exams, even if you are in practice, right? You will not have that opening totals, right? Your cash receipts journal will start with an opening balance. Maybe that is what we should just discuss here. That is not the opening balance. If you remember, if you think back to the question, they did give us opening balances, right? They did give us opening balances, but over and above the opening balances, they gave us a total of transactions that occurred during the course of the month already. And then we had some additional transactions for the month, right? So in all cases, you will always add up the whole column, right? The whole column. Maybe I should do that as well. So the true total will actually be that. Might as well take it all the way down to there. So that will be, let me call that the actual. That will be the actual total. Let me maybe do that for all the columns. Right, so the important thing is that just for this exercise, what I need to point out there, Shikambuzu, is just for the sake of this exercise, because of the way that the general ledger is being disclosed, they've shown it there, this transaction, and then the total of the others excuse me, separately. But in practice, in real life, it will never be shown separately. You'll have an opening balance that you carried forward from the previous year, yes. But then you'll just have transactions. Then you'll just have transactions. So the total of all your transactions will then be recorded there. Just excuse me a second. I had to cough again. Okay, you've noted. Thank you. But a good question. Thank you, Shikambuzo. So now everybody knows that it'll always be the full total. Let me think. What now? Now let us now see. We've got here in our cash receipts journal, we've got the total sales of 143 rands that was initially recorded before we even recorded the extra ones. We've got the 3,370 sales, we've got 506 output, and we've got accounts receivable of 756. So I'm just going to stop sharing that. Just keep those figures in mind. Just keep those figures in mind, and then we are going to go to the ledger account. The general ledger with all the various ledger accounts. Now, because I'm using full screen, unfortunately, I'm not using split screen because then it becomes a little small. I'm not displaying the two documents at the same time. But if we, for instance, look at the, where will we start? Let's look at the, the first one was our bank account. Let us look at the bank account. Where is the bank account? So that was the opening balance, that balance that appeared in the balance that appeared in our trial balance at the beginning. Right at the start of the question, they gave us a trial balance, right? That gave us a trial balance. And then, ladies and gentlemen, we saw in our cash receipts journal that the total receipts for the first half of the month, let's call it the first half of the month, was that 196,950. And then we had three other totals in our cash receipts journal. It was for the accounts receivable of 753. It was for sales of 3,370, and it was for VAT output of 506 rands. Right. Let us maybe do one more. Let us go. Now I've just got to stop sharing that. Sorry, this now takes a little bit of a while. Let us just go to our Excel again. So that was our cash receipts journal. Let's maybe just do our cash payments journal as well, ladies and gentlemen. So there we saw that we had a total. Now this time let us look at the opening balances as well as the transactions again. So we saw that besides the opening balance itself, there was this total of transactions for the first half of the month that related to bank purchases 28,200, VAT input of 4,230, and accounts payable of 37,600. And then we had these additional transactions that affected our credit side of our bank account, and that was for the wages that we've paid, for the creditor traders that we've paid, and for the water and electricity that we've paid. Right. So I'm just going to stop sharing this one final time for today, and we're going to go back to our bank account in the general ledger. Bank account in our general ledger, and there we can see that in this case we had an opening balance that was a debit, so we won't have an opening balance on the other side. But there we've got the total payments for the transactions during the first half, right? So the first half of the month is now separate there from the rest of the transactions that we actually went to capture ourselves, and there we find them: the salaries and wages total of the column, the accounts payable total of the column. These are not they happen to be the same individual amounts, but remember, in reality, these are the totals of your columns. And then for the water and electricity, we didn't have a column. For the water and electricity, we had to use the sundry column. So that means we are going to debit the water and electricity expense was 2,974, and we are going to debit the VAT input was 446 rands. Right, ladies and gentlemen, that is basically it. That is basically it. Are there any questions on anything to do with special journals and special ledgers? We've now seen what are those special ledgers. The only other ledger, obviously, besides the special ledgers, is the general, not the special ledgers, the special journals, I should say, is the general journal. Right, so we've got those six journals. We might have, in certain circumstances, have a inventory journal as well, but we're not doing manufacturers now. But when we are doing manufacturing concerns, we'll also have an inventory journal or a raw materials journal, if you wish. And then we've got the general journal. And we've looked at all our subsidiary ledgers. We've done our postings to the subsidiary ledgers. We've seen how we do the postings to the general ledger accounts in our general ledger. Mr. Adams also did a comprehensive example there afterwards towards the end of Monday's class, so that's all done. Any other questions from your side regarding journals and ledgers? Okay, then just to round it off, ladies and gents, I just want to mention this. I mentioned this on Monday as well. There are one or two, or maybe even three. I don't think it's three, but there are a couple. There are a few short questions on the basic principles of reconciliations, especially bank reconciliations. So we're not really going to go through the detail now because Mr. Adams is going to work through a detailed bank reconciliation and a detailed creditors reconciliation with you on Monday. But just those basic principles, which I've basically touched on Monday, we must remember that when it comes to a bank reconciliation, or before we even get to the bank reconciliation, the bank owes us money. If we have money in the bank, Tamarin, I'll address your question just now. Where was I? If we have money in the bank, it means The bank owes us the money, right? So from our perspective, they are almost like a debtor. I know they're not literally a debtor, but they owe us money, so they are similar to a debtor. From their perspective, we are really a creditor of theirs because they owe us our own money, right? We've invested our money in a bank account there, so they owe it to us. So it means we are looking at a mirror image for each transaction, a mirror image of each transaction. So if we deposit money into the bank account, we debit the bank account because our asset becomes more. But from the perspective of the bank, they've received more money from us, so they owe us more money, right? So that means they are going to credit our account in their records. We are debiting their account in our records, they are crediting our account in their records. Which means that when we get the bank statement, it is going to be a mirror image of our own bank account. So everything that we would have debited in our bank account would show up as a credit on the bank statement. And everything that we've credited in our bank account, in our general ledger, will show up as a debit on the bank statement. And then the whole purpose of the reconciliation, or there are many purposes, but one of the purposes is to make sure that all of those transactions agree, right? So all those transactions, all our debits must be equal to their credits. All their debits must be equal to our credits, and so forth. And if there is a difference, we've got to investigate it. So the differences, as we'll see on Monday, could be simply where the bank has done a transaction on their side that we're not aware of. So, for instance, they could have credited our account with some interest. We might have earned interest on that account, so they would credit our account in their books. So it'll show up as a credit on our bank statement, or on the bank statement they send us, which means we'll have to go and update our cash book. We'll have to go and update our cash receipts journal with the interest that we've received. Or if they've charged us some bank charges, which of course they will do, we might not know about it before we receive the bank statement. So they would have gone and debited our account in their book, so it'll show up as a debit on our bank statement, which means on our side we must still go and record it by crediting our bank account and our cash payments journal. So those are just the basic principles that I wanted to mention. So that is it for today. Tamarin, let me just go and see where can I find Monday's recording. Let me just go and have a look. If you can just bear with me, I'm going to stop sharing that. Content per topic. Content per topic. Then you scroll down to topic number 9, special journals, ledgers, and reconciliations. Then you'll see there's special journals and ledgers class number 1, 14th of August. Then there's special journals and ledgers class number 2, 16th of August. Under that same folder, ladies and gents, I'm going to post a recording of today's class. So it'll still be under special journals and ledgers class number 2, 16th of August. But if you open that folder, you will see that there will be the recording of the 16th, last week, Wednesday, but also then the recording of today. So that will be in that folder. And just below that, Tamarin, just below that is a recording that is called Special Journals and Ledgers, Comprehensive Example, 21st of August 23. So it's the third item from the top. The first item is a recording, the second one is a folder, and the third one is again a recording of last Monday. Okay, can you see that? You've got that now. Ladies and gentlemen, thank you for attending. I appreciate that. Thank you for your reactions, and thank you for participating so actively in the chat. that we could see that you know where to find the answers or how to come to the conclusions. Thank you so much. Have a wonderful rest of the afternoon and evening. Bye bye.